Hello and welcome back to The Note. We've had more dramatic trading across world markets today, and this is likely to be the case also on Friday. It's been led by new data from the US employment market. Now, we've discovered that unit labour costs have risen more than expected, suggesting that the US has something of a productivity problem, may even, despite all the concerns about recession, have an incipient inflation problem. But attention is perhaps focused primarily on jobless claims data, a very good leading indicator for the unemployment market as a whole. And as you can see, those initial claims for jobless insurance continue to tick up slightly. Now, this is consistent with this marking a turn in the unemployment data, a turn for the worse, and seeing the unemployment rise again. However, it's plainly far too soon to say that with any certainty. There have been a number of periods over the last few years when claims have ticked up just as much as they have done over the last few weeks, and the ongoing trend soon resumed downwards. But it all adds to the jitters and the nervousness ahead of what could be a very important jobless report for January. Now, in terms of the impact that this had, it meant that the dollar had another very bad day, and that at least had a positive response for emerging markets currencies, obviously under very great strain as the dollar has strengthened over the last year or two. They have at least seen a fair bounce back over the last few days as the strong dollar thesis has come under question. If you want a perhaps more concerning market development, let's take a look at the gold price. Gold has been in a driving bear market for several years now. It's made a series of attempts to break out of that downward trend without success. The rally it's in at the moment does indeed look like the most convincing attempt to establish a new upward trend for a while, and that's intriguing because, of course, it's coexisting with a deflation scare, a belief that the prices are actually going to go down. As gold's great benefit is that it holds its value, generally speaking, when money looks as though it might actually gain in value thanks to deflation, that's bad news for gold. Therefore, I suspect the reason we're seeing this rally is that gold is being used almost as catastrophe insurance. There's a belief that central banks aren't going to be able to maintain control of the situation, that they're out of ammunition, and therefore people are buying gold as a defense. All signs of very great nervousness as we move towards this very important, potentially jobless report for January.